The Tax Cuts and Jobs Act, as amended, is passed.
Last year, Congress enacted the biggest tax overhaul in a generation by making modest tax cuts for the middle class and slashing corporate tax rates. President Trump said the overhaul would bring big economic benefits to the country. Well, now that Americans are filing their tax returns for the first time under the new law, what kind of changes will they actually see? Here's what it means for your personal finances in 4 minutes or less. Under the new law, 80% of Americans are expected to pay fewer taxes in 2018, according to the Tax Policy Center. That means many Americans are getting more money in their paychecks. But many filers will see smaller refunds than they did the previous year. In fact, IRS data shows total tax amounts refunded are down from tax year 2017. Here's personal finance expert Lynette Calfani-Cox to explain how that's the case.
In 2018, the big change that happened is that the withholding tables changed. And so for most people, they actually did have less taxes taken out, so they had bigger paychecks. The problem, though, is that it was a relatively small amount. For some people, it was like $20, $50 maybe every single pay period, so it wasn't particularly noticeable. So when people heard that they were getting a tax break, they thought that their tax refund checks would go up. But that's not actually how it works. The reality is that fewer taxes were taken out of their paycheck over the course of the year, and so that, in effect, was the refund that they received.
Getting less of a refund is actually a good thing. If you get a refund, you paid too much in taxes to the government over the course of the year. Basically, you gave the IRS a zero-interest loan, and that is not a good financial move. You're much better off having that money in your pocket throughout the year and putting it into a savings account earning interest, or your employer's 401k plan, an IRA, or just investing in an index fund where your money can grow. So, you don't want a refund, but you don't want to pay a big tax bill at the end of the year either. If you weren't happy with where you ended up this past tax year, you need to adjust your paycheck tax withholdings now, so you pay closer to the right amount you owe in taxes for 2019. Here's Lynette Calfani-Cox again with an explanation of how to do that.
You need to adjust your withholdings, and you do that by filling out a new W-4 form. For 2019, the IRS has given us a new form to fill out, and the key line on this form is line 5, which references your allowances. The number of allowances that you claim are vitally important to telling your employer how much in taxes to take out. But I want to show you something else because it's super important here in terms of being able to figure out how many allowances you should take. This is page 3, which is the personal allowances worksheet. There's actually another part to this, though. There's page 3 and, get this, guys, page 4 as well. You really do want to take a look at this to figure out how much you should have withheld. If all that is just way too much to comprehend on your own, check out the IRS's website because they have a nifty tool online called the IRS Withholding Calculator to help you get it done digitally.
Going forward, the key for your personal finances is being mindful of the total tax you pay throughout the year and not the amount of your tax refund. With just a little bit of personal tax planning, no matter what changes in the law, you can avoid any unwelcome tax surprises next year.
Hey, NBC News viewers, thanks for checking out our YouTube channel. Subscribe by clicking on that button down here and click on any of the videos over here to watch the latest interviews, show highlights, and digital exclusives. Thanks for watching.